The True Potential Portfolios, formerly known as our Managed Portfolio Series, now has over $1 billion invested since October 2015 when we launched. We would just like to take this opportunity to thank you all for your ongoing support. Looking at the performance figures, we are particularly pleased with the results, with strong positive numbers from across all our portfolios from defensive through to aggressive. Performance since launch is also showing double-digit figures for those portfolios with increasing levels of risk from balanced through to growth and aggressive. You could say that investors that have taken on higher levels of risk have been rewarded during this period of uncertainty. However, what we do is not just about performance. One of the key areas that we look at is risk. Both True Potential and our fund manager partners that we have for our wealth strategy fund range are also very aware of risk levels within the funds and portfolios. What we offer is a good risk-adjusted return, and what we mean by this is maximising returns for a given level of risk. We will not take more risk than is necessary, and certainly no more risk that could push an investor out of their risk category. Every month, we speak to our fund manager partners to ascertain what the key short-term themes are, and then we examine ways whereby we can tilt our portfolios towards these themes. For August, looking across the asset classes, our fund managers have views that are similar, and there are areas where their views differ. The ultra-low yields on sovereign bonds are causing our fund managers to coalesce around a view that they are not consistent with current economic fundamentals that have been improving. They are also like-minded in their thinking that the credit cycle is deteriorating, but not in a serious way. For income managers, it makes sense for them to hunt around for yield in corporate debt and overseas debt markets, whilst being cognizant of liquidity requirements should there be a reason for them to sell. Manager views across equities are divergent. Our managers like the US, but are not so keen on high stock market valuations. Our managers are distrustful of Europe, but find their stock market valuations a lot more attractive. Japan divides opinion, with some fund managers believing that central bank support is not effective, and others believing that the Bank of Japan can really drive returns. Over the month, we have made changes to all portfolios, with the main change being the addition of the new True Potential UBS Wealth Strategy Fund range. We believe that adding UBS to the portfolios will allow us to differentiate across style and allow us to manage the portfolios optimally on cost, long-term expected return and risk-adjusted return. Changes to the Cautious Income Fund this month reflect a need to rebalance to optimise on risk. Every month, we aim to optimise on as many factors as possible, and risk is a key element in the mix. So in this context, what we've done is we have reduced down our holding in the True Potential Threadneedle Monthly Income Fund, and also our holding in the Close Brothers Cautious Income Fund, and reinvested the proceedings back into the Schroders Cautious Income Fund. For the balanced income portfolio, what we have done is we have reduced down our position in the True Potential Threadneedle Monthly Income Fund and reinvested this back into the True Potential Schroders Cautious Income Fund. The position in the Schroders Fund has been increased, taking the view that this fund accesses fixed interest using specialist fund managers, and the fund's high level of manager diversification should help guide the portfolios through all market conditions.